A small cap construction and infrastructure stock with a long history, major projects across India, and significant revival potential. In this analysis, we explore the company's fundamental business profile, long term outlook, and bullish catalysts that could drive a multifold re rating, including 1 year upside target of 320. For more than 3 decades, BL Kashyap and Sons has been involved in shaping India's commercial, residential, and institutional infrastructure landscape. The company's journey can be traced through major malls, IT parks, industrial facilities, hotels, and corporate office spaces across the country. Yet, despite its role in infrastructure expansion, the stock currently trades in the small cap zone, unnoticed, undervalued, and often misunderstood. Today, we take a look at why that narrative might be changing. Hello, guys, welcome back to the channel. So, guys, this company founded in 1989, BL Kashyap and Sons Limited operates as a constructions and engineering contracting firm with end-to-end execution. From a business standpoint, the company participates in three structural segments, that is commercial construction including offices, corporate parks, IT towers, and mall hospitality projects. Residential construction including premium housing, apartments, condominiums, and gated. The industrial and institutional projects including manufacturing units, logistics hubs, data centers, research facilities, and other industrial spaces. The company's operational presence spans multiple Indian metros including Delhi, NCR, Bengaluru, Pune, Hyderabad, Chennai, and Mumbai. Well, let's talk about its industry context. The company construction infrastructure sector in India is undergoing its strong multi-year cycle backed by government infrastructure spending, corporate capex, logistic expansion, real estate revival, manufacturing investments, data center, warehouse demands, etc. In addition, the urbanization trend and high demand for premium residential housing continue to accelerate. Companies in this space with long execution track record, certified compliance standards, and relationships with major developers gain preferential access to large orders. BL Kashyap fits into this ecosystem with a legacy brand name, a diversified client business model, and order books. In construction businesses, revenue visibility is determined by the order book, the execution cycle, and working capital efficiency. BL Kashyap maintain a project-based execution model where contracts and BL Kashyap maintain a project-based execution model where contracts are displayed over 18 to 36 months. This creates predictable revenue flows once new order. Over recent years, the company has reported consistent addition to its order pipeline, particularly from commercial and institutional clients. The order book serves as a forward indicator for future earnings. Another important component is the shift towards a high margin specialty construction, including data centers and industrial projects. These segments offer superior profitability compared to traditional civil construction. Let's move into the fundamentals. Historically, the company struggled between 2014 to 2019 due to sector slowdown, tightening capital cycles, and delayed project execution. But recent financial years show clear normalization in revenues, healthier balance sheet alignment, and a strong collection efficiency. On valuation parameters, the company's market cap remains small cap. The price to book ratio trades at a premium relative to book value. Earning remains volatile but recovering. Debt levels have moderate under control. Working capital days improved from prior stress. From a pure valuation perspective, construction stock often trade at deeply discounted multiple until earning visibilities becomes clear and then re-rate sharply within short windows. Promoters hold a majority stake of over 60%, giving stability in ownership and long-term strategic alignment. One concerning factor historically has been pledged shares, a source of market worry. However, if the company executes earning expansion and reduces pledge holding over time, institutional money can enter the stock in a big way. Currently, retail and HNIs category dominate non-promoter holdings. Institutional involvement remains extremely low. And that is exactly how most value inflection small caps begin their journey. There are several catalysts that make BL Kashyap an exact there are several catalysts that make BL Kashyap an exciting bullish small cap candidate. Catalyst 1 order book order book where Catalyst 1 order book visibility, a new project materialize, margin expansion, drive profitability leverage. Sector revival, Indian construction and infra expansion is not cyclical today, it is a structural backed by government spending, private capex, and urban growth. Re-rating potential, small caps in infra space can multiply 5 to 10x when earnings stabilize, institutions enter, and pledge reduce. Macro tailwind, data centers, logistics parks, industrial plants, and warehouse are the new infra cycle. BL Kashyap is directly positioned in this shift. Enterprise diversification, the company's engagement span commercial, residential, industrial, and institutional, lowering cycling sensitivity. Construction firm scale earnings faster than top line because fixed assets remain largely stable. Premium residential real estate demand is at a 10 years high in metros. Developers with significant pipeline execution could feed new orders to construction firm like BL Kashyap. The achieve multifold returns three forces need to align: sector rating, company specific margin expansion, institutional participations. BL Kashyap sits in the early zone of this. Execution delays, margin pressure due to raw material fluctuations, working capital crunch, pledge share overhang, lack of institutional investors, earning inconsistency. While these risks exist, the reward profile become attractive when valuation remain compressed and sector tailwinds strengthen. At a current level, the stock remains a classic value being picked in the small cap basket. Its market cap does not reflect its sector standing, legacy brand, or project execution track record. Improved earning could drive a valuation re-rating. Our bullish scenario assign a 1-year upside target of rupees 320, positioning it as a potential multi-bagger candidate, and we are assuming that company will improve order execution, margin normalization, better working capital cycles, reduce pressure, strong real estate and infrastructure demand meet positive market sentiment. Such re-rating target are the stock carries historical baggage, sector cyclicality, and risk, but also a unique combination of catalyst, fundamental, and positioning that could unlock massive value in the coming cycle. For bullish investors who specialize in small cap infra plays, this is a stock worth watching closely over the next 12 to 24 months. If you found this analysis valuable, stay tuned for more small cap deep dives, business breakdowns, and sector outlook videos. Remember, construction infrastructure reward only those who can look beyond current earnings and analyze future cycles. So guys, this is the all for this stock. Thank you for watching. See you in next video.